Alright, Professor Jim Schultz here for my Finance 512 class. I wanted to take a few minutes tonight to shoot a video going over both fractals and Fibonacci. I want to go ahead and include both of those in this video. I'll kind of do them separately and then probably combine them at the end in terms of kind of an overall discussion. But I have a 1-year chart with daily candles up for McDonald's, and so this is obviously a stock that you guys can trade. And I wanted to go ahead and dissect this chart from, again, both a fractal and a Fibonacci standpoint. Now, let me go ahead and say something. It's always easy in hindsight. I mean, that is just absolutely true. It always looks crystal clear in hindsight, and then when you try to apply these tools in real life as they're happening, it's much more difficult. And if you guys have not figured that out yet, you will very soon. But that being said, before you ever can hope to successfully apply any concepts in real time, you have to be able to understand them in hindsight. And so keep that in mind as we go through this. So hopefully it can still become a very useful learning tool for you guys, because trust me, until you can do a single Fibonacci retracement successfully in real time, you've got to understand what they look like after the fact and historically. So let's go ahead and start off kind of on the left hand side of this chart, and I kind of want to, so I'm going to take this general area and I'm going to maximize it just so we can see the candles a little bit more clearly. Alright, so if you look at this section, right, that right there, that is obviously the high of the chart. But if you look at this 3-candle pattern, that is a fractal high. Now that is a fractal high because, again, that candle is higher than the 2 candles, one on either side. Now again, if you use a 5-bar pattern, it would be these 5 candles, which is also fine. But what do you see? You see that after this fractal high, right, the price fell, which is something we talked about in class. Now, if you go a little bit further to the right, you see another fractal right here. Right, so this is also a fractal because this candle is higher than the 2 candles on either side. And what do you see? Up here, it did actually make a slightly higher high than this candle, but then the price fell with this really big gap down here, right? And so these are 2 fractal highs where the price did indeed fall after the fractal highs were formed. Now, if you look at this fractal, well, this one, I'm not going to use this one because that is technically a fractal low, but with that huge gap, I would just go ahead and omit that one. Look at this right here. This is also a fractal, right? There's your low point. Here's each candle on either side that is higher than this one. And what happened? The price went up. Now, it only went up a little bit, but it did go up. And then you see this is a fractal high, right? And then the price went down. This is a fractal low, and the price went up. Now, this guy right here, it's important because right now you're thinking, wow, this is super easy. I just find these fractals and they always work. Well, it's a very powerful tool. That's why I went through it in class, but they don't always work. It's certainly not 100%. Because this guy, if we look at the high of this candle, it was 97.83. Well, actually, I guess this would be the fractal. This is 97.84 is the high. So here's your fractal right here. Now, it doesn't look too great because that's barely higher than that guy. But you would expect the price to go down after that, and it didn't. It went up. So this would have been a losing fractal, so to speak. So those are a few fractals in this swing. Hey, here's another fractal low that just kind of jumps out at me, right? Here's the low. Here are the 2 candles on either side. And what do you see? It went down a little bit, but then it pushed higher. Here's a fractal high. This is a fractal high, and it is also a pin bar, right? Because you see the shadow kind of sticking out from everything around it. That would indicate its pin bar status. This guy might also be a pin bar, but I'm not too crazy about that one because the body's too big, right? You don't want the body to be more than a third of the entire range, and so I like this guy a lot better in terms of its pin bar status. So those are a few fractals that I want to point out in this initial swing. So I'm gonna zoom back out. So let's look at this. Let's look at this swing, right? Now, what would the Fibonacci retracement tool look like right here? Well, again, if you were looking like so here's the high, it goes lower, it makes this fractal low, right? Now this low blew out the lows here and here, so maybe now you're thinking, all right, I want to get short, I want to get, I'm looking for a good sell opportunity to short McDonald's. Well, then you're going to want to fib from this high down to this low. So again, we go to drawings, we go to Fibonacci retracements, click the high of that candle, bring it down to the low of that candle. Boom. And what do you see? Now I'm gonna stretch out this this axis a little bit so we can see it more closely. And then if you go to drawings and this pan feature, it allows you to move around the chart, move it up and down, or even left and right sometimes. Okay, so if we look at this swing, what do we see? It retraced right back up into that sweet spot that I've been talking about, right? That ICT has laid out for us. That's really, really effective. I mean, it went right down there and then boom, and then the bottom fell out. So this was like a perfect swing, right? In terms of it behaved exactly as we had anticipated that it might behave, right? Okay, so maybe you catch that swing, right? Again, you see this swing unfolding. What could you do? You could put your limit sell right here, right? So you have a limit sell sitting right there. Now, where would you put your OCOs? Well, I would put your stop above this high. You want to give this high an opportunity to act as a last level of resistance. So maybe you put it up here around, I don't know, it depends on how much breathing room you want to give it. Maybe you put it up here around 101.50, 101 and a quarter. I don't know, you got to kind of play around with that, right? That's kind of a subjective thing that we talked about in class. But what would your target be? Well, again, McDonald's made a lower low. So if the bearish trend continues, you expect it to blow out this low and end up somewhere down here. So I would target this area down here, right? So you get in up here around 99.30. I would target 94 and a quarter, right? You get in at 99.30, you put your stop up at 101.30 to make it easy. That's $2. You target 94, that's over $5 on the upside. That's a 2.5 to 1 return per unit of risk trade. That's a nice trade, right? So okay, so let's get rid of this swing. Delete drawing. Now you're thinking, rats, I missed this swing. It set up so perfectly, right? So then what happens? Then you watch this swing. Now notice it made another lower low, right? So it blew out this low. So again, the bearish trend continues. You're expecting lower prices. So maybe you take this swing from this fractal high down to this fractal low, and you fib that swing, right? So I go down to my Fibonacci retracements, click the high, bring it down to the low, boom, and what do you see? Once again, man, I mean, it's kind of ridiculous how this continues to happen, right? But again, it hits that sweet spot perfectly, and the bottom falls out once again, right? If we go down lower, I mean, it fell all the way down here, right? And so you're thinking, all right, so those are a couple opportunities where you could make some money, right, on using a Fibonacci tool. Now, obviously, let me point one out here. Let's crunch this back down. So, yeah, I was gonna do this swing, but it didn't really. I mean, you still would have made some money. So let's try to find a swing where it wouldn't have worked. Well, obviously, so let's say that okay. Fractal high here, it goes down, it makes a fractal low here, but it didn't retrace enough if you're looking for the 70% level, so that this one isn't even valid. But let's take this swing right here, right? So this is a good example of one that would not have worked, or it kind of would have worked. You'll see what I mean. So you've got this fractal high, which is this candle right here, down to this fractal low, which is this candle right here. So I'm going to stretch this back out a little bit so that we can see things a little bit more clearly, and then I'm going to fib from this high down to this low. Boom, what do you see? Alright, now this one's a little different, right? So what do you see? It went down, it formed the swing, it retraced right up into this sweet spot, right? And then it did move in your favor. Now maybe, if you're targeting down here and it's kind of an all or nothing thing, then this would not have worked out for you because the prices then pushed higher and probably blew out your stop up here, right? So you got swept out up here, and this will probably be a losing trade. Now, one of the things I mentioned in class was when it starts to move in my direction, by a significant amount, and I'll define what I mean by significant in a later video. But I would begin taking profits as this thing starts to move. And so I don't know, maybe you got a little profit here, right? And then brought your stop from up here to break even, and you only got a tiny profit, and then your stop got blown out when the prices retreated higher. And so, but I wanted you guys to see, it's important that you see some fractals that work, but also some fractals that don't. And it's also important that you see, some Fibonacci that works and some Fibonacci that doesn't. And so let's delete this drawing. I'm gonna scrunch this back up. Okay, so let's look at. So we looked at some historical things, and we could measure some more swings. Obviously, I see a bunch of them in here. But one thing I want to mention is let's look at what's currently happening in McDonald's. Right? You had a low here, right, and it was a lower low, but then it made a high, and then it made a higher low. So what do you see? You see potentially the formation of a bullish trend with higher prices. But now what do you see? You see a high up here. So this is your fractal low, right? And there are other fractals in here, don't get me wrong. I mean, that's also a fractal high, right? But this is a fractal low, and based on what has happened, this is the key fractal high, right? These 2 points, this is your low, this is your high. This right here is what I would call the dominant price swing at this time. If you notice, even historically, I didn't pull out every last little tiny little swing, right? You really want to start looking for and trying to spot the dominant price action at the time, because the probability of your success will increase substantially if you focus on the dominant price swings. Now again, you're going to spend a lot more time in the bushes, right? You got to be a lot more patient, because you're not going to play every single swing. You're not going to trade every single movement in the marketplace. You're going to wait for the low-hanging fruit, so to speak. So to me right now, this looks like some low-hanging fruit, if the market behaves as we would hope it behaves, because it made a low, it made a high, it made a higher low, and then it made a higher high. It blew out these highs, right? Now, one thing you could do is, like we've talked about in class, you could use this area of previous resistance. You could draw a line over here, and you could say, hey, it's sitting at previous resistance right now. I'm expecting that to act as support. That would be a pretty good trade, to be honest with you. But I actually think a better trade would be fib from this low up to this high, right? I would wait for a retracement down into this area, right down here. Now, whether you want to do the 62, the 70, or the 79 is entirely up to you. I personally, again, I like the 70% level per ICT's recommendations and all the things I've learned from him. I like that level. It gives you a nice return per unit of risk, but you have to be a lot more patient. And again, keep in mind, this chart is a daily chart, so it could take weeks for this swing to unfold. But I just wanted to show you, Fibonacci and fractals on any chart, actually. And so this is the current swing that's in place. I would potentially consider having a limit buy set up right here at about 89.65 or 89.70, right above the 70% level. Put your stop down here, and I would target some level up here, maybe around 100, right? Maybe it goes after its high from that we saw earlier on the chart. If this 101 level, right? Maybe you say, all right, look, 101, 101.04. So it had a hard time with that psychological level. Maybe you put your target at 180, 185, where you're like, hey, if it gets up there, I'm happy with that gain. I'm not going to try to wring every penny out of this trade. I'd be happy catching 75, 85% of the move. Okay, so hopefully this was helpful for you guys in terms of beginning to understand how to apply fractals and Fibonacci's to your charts. I'll certainly do more videos on these things in the future, and you can expect, like I said in class, you can expect a live trading video of my own trades coming up pretty soon. I probably won't get to that till early next week, or maybe Sunday night I'll do a video showing how I kind of set up my charts for the upcoming week. But keep in mind, a couple things to keep in mind. Kind of a review. Every fractal is not going to work, okay? Every Fibonacci is not going to work, right? Remember, this is just a probability game. We're just trying to put the odds in our favor, right? And so don't expect every single one to work. It's not like, you see a Fibonacci, you cash the check and take it to the bank. That's not quite how it works. Sometimes it's going to feel that way, don't get me wrong, but the goal is to put yourself in more positions where you can make some money, right? And again, adjust your risk and return accordingly so that you don't even have to be right 50% of the time and still make some decent coin, right? But the second thing I want to point out is this is a daily chart over a 1-year time horizon. These swings and these fractals and these Fibonacci's, they're on every single time frame. Every time frame. So you don't have to use a daily chart. I just picked this one because it had some nice clear swings, and from an educational standpoint, it was easy for me to kind of show the swings that are unfolded over the last year and also the current swing. But if you want to use a 15-minute chart or a 1-hour chart or a 4-hour chart, go ahead and do it. You're going to see the swings unfold on those levels too. And you'll see, how I apply these in my own trading pretty soon in terms of using the different time frames and how I arrive at a decision to buy or sell. So hopefully this was helpful for you guys going through fractals and Fibonacci's, and I'll see you guys next time.